What's going on, TPFX? It's Fractal back with another video. I just wanted to make this quick video. It's Thursday, the 23rd of October. So yesterday was Wednesday, midweek. I wanted to bring you guys a quick video on we potentially have a midweek reversal in the dollar index. So let's get straight into the video. In my last video, I talked about price trading down into this gap here and trading back up to take out buy side liquidity. However, as we were trading up, we traded up strong on Tuesday. That was the model setup that I showed you guys in my last video. And then Wednesday, we had this down close candle. Notice how we traded into this fair value gap, right? But we traded a little bit above it. But when I look at this up close candle as a bearish order block, I'm not going to consider this up close candle as a bearish order block because this is smaller than this candle. So it's in the range. So I'm just going to use this full candle. Now let's grab a 50% of this up close candle and get closer into the price action on a daily chart. So you have low to high, we traded down, but now we have we have high going out to this low, trading back up into the midpoint or the consequent encroachment of this order block. Wednesday, Thursday. So Wednesday and Thursday potentially can be high of the week, midweek reversal. So let me just draw out 50% of that. Okay, cool. You have the 50% level. Let's go down to a hourly. So this was our low point, trading back up into this premium level. So notice how we traded into it on Wednesday at 8 a.m. We had a nice strong move down. So with the break in structure from this low to this high, and then we broke the structure. If I grab a Fibonacci tool from this high to this low, we can obviously see price traded into the high. But if we go really close, it did not trade above it, right? We had a swing high here. It did not trade above this high. So technically, this high is the high of the week, which is a Wednesday. So if this is a Wednesday high of the week, right, we can potentially see today being Thursday, a bearish day, right? So just take everything from the beginning of the video to now. That is a quick review on higher time frame bias, how you use narrative and logic and PD arrays to get down from a daily all the way down to a 1 hour chart. Okay, so remember these levels. We had 99.115 and we have 99.563, right? Because that's the high, and then this is the consequent encroachment. So I'm going to just take the consequent encroachment level off. And now we're going to just zoom in to the daily range. So we started on today's Thursday. We're still in. It's about to be 9 a.m. So we're still in the New York kill zone, New York session. But I wanted to bring you guys this video really quick because our fractal model played out pretty precisely. So intraday, we opened here at midnight. We traded lower in London and then trading higher into the London lunch into the New York start, which was here. This candle here was 7 a.m. Notice how we run above this old high, right? Let me draw that out. We run above an old high. So I was watching this old high as well to see if price would trade above both and then do the bearish move that I'm looking for, right? However, price didn't trade above this one. It only got above this. So I was using this as my old high for the intraday fractal model. So now let's go down to a 15-minute chart. I'm going to give you guys some insights on the 15-minute chart today. So as I talk about, as we run above the old high, we didn't get to this one, but notice how we traded back below this up close candle, this order block. Most people trading this model, they wait for the swing low, which is fine. That's a deeper confirmation that price should be going bearish. But I'm going to teach you guys something different today. This up close candle can be considered as a bearish order block, but only after it gets broken by the low. So this candle at 7:30, we traded lower and we broke this up close candle. So for fractal traders, we will consider this as an actual breaking structure, because this being the 15-minute chart, we know if we go down to a 1-minute or 5-minute chart, we can probably see a breaking structure. But not having to go down to a 5 or 1-minute chart so quickly, we can just already have a clear understanding that this might be a potential breaking structure. So order block gets broken. Now look what price does after the order block gets broken. Continues to trade lower, and then at 8:15 we have a trade back up, right? Trading back up into this order block, but more specifically the rejection block, which is the highest closing point. So we're going to just use this point here, right? So price trades back up into the highest up. It's specifically the highest up close. So I'm going to actually be more specific. It's the highest up close candle in the high, not the highest close. It's the highest up close. So when price trades up 8:15, it trades into the highest up close. This right here is going to be your 1-minute optimal trade entry or your 5-minute optimal trade entry, which we'll see on the lower time frame. But where are we going to take our profit, Matthew? We're going to take our profit under the old lows. One right here, one right here, and I'm currently seeking the liquidity below the London lows. So now let's go to the 1-minute chart, and we'll get to see it. I know it looks like a bunch of lines, but we're going to clear it up for you guys right now. So we have 7 a.m. open. All right. This was our old high on the 1-minute chart or on the hourly. We trade above it. We open at 7 a.m. here. From this high to this low, that is what we're considering our strong move. So if I grab a Fibonacci on this high to low, you can see price when it retraced back into a 62 to 79% retracement level, which is a optimal trade entry. And I already marked out my sell side liquidity, which is my take profit areas or areas that I can take partials. And our main target for today will be under the London low. So let me just take this fib off so you guys can see. It's only a few lines. It's not a bunch of trend lines or arrows or rectangles. These are just a few lines based off PD arrays and time. So it was a quick video. I showed you guys something on the 15-minute chart that hopefully it doesn't go over your head. And yeah, take care, guys.